So this came as a pretty big shock to a lot of merchants. We had one migration happening. They were porting their shortcode, an error in paperwork, sent that shortcode into basically like no man's land for something like 6 weeks.
If you start that process 6 to 8 weeks out from December 31st, you're literally looking at basically the beginning of November.
That's a really bad place to be in. So today we're going to chat through the Yotpo migration. I guess pretty big news broke on August 5th, I think. I got the date right there.
Yep.
About Yotpo sunsetting their email and SMS tools. So for a little bit of background, so Yotpo, obviously the industry leading platform in reviews, loyalty. They also for the past few years have been building out their email and SMS products as kind of part of their larger product suite. They came out with a pretty big announcement on the 5th of August around how they're sunsetting at the end of this year. So this came as a pretty big shock to a lot of merchants, especially since going into Q4, a lot of replatforming may have to happen ahead of that sort of like, October, November period. So today we're just going to chat through what merchants should be aware of if they're going through a migration, especially this close to Q4. Before we jump into things though, Liam, do you want to share a quick intro on your side?
Yep. So, looking forward to chatting about this topic because I think it's really important, and especially with the tight timelines. But yeah, quick intro. So, one of the founding partners at Aplo, have overseen more what we do on the auditing, pitching side of things, and bringing new brands on board. So, a lot of discussions around ESPs, migrations that we also support, et cetera. So, yeah, very excited to dive into this. But big news because again, the timelines are pretty tight. So, it's kind of got some people scrambling to make sure that they actually have this plan in place before December 31st, which is when Yotpo rolls it back completely.
So we'll chat through like the challenges that come with a migration. For those of us that have done migrations in the past, I'm sure a lot of brands will remember those few months of, moving over a lot of business logic, a lot of infrastructure, a lot of creative negotiating, new terms, new rates with SMS providers, email providers. So it's definitely an involved process. It's not something that happens over the course of a weekend. It's definitely something that, a lot of, it takes a lot of time and a lot of different parties kind of working together to make it happen. So Liam, I guess before we jump into the maybe like technical side of migrations and some of the challenges there, overall, like what are some of the challenges around this particular migration? Because you mentioned the timing of it. And that's the thing I think a lot of merchants are just like expressing the most concern around.
When brands do ask us about migrating platforms, usually as we get into this time of year, so like August, September timeframe, we usually say like kick the can until Q1 if Q4 is a big peak for seasonality wise for them, which for most brands it's a pretty busy time of year. So in most cases we recommend if you are looking to migrate platforms on the ESP side specifically, because it's a bit of a process and the time frame is August and September when you're thinking about it, usually try and just push that until Q1, because again, like with any migration, there are pretty big risks involved with it. Now, everybody's going to tell you that everything will go smoothly and there's no risk in doing it, but it's like anything that's that much of an undertaking. Like if you're launching a new website or something of that nature, there's always little things that pop up and there's usually something that goes wrong. Obviously, we try and contain that risk as much as possible and do it methodically, but it happens. So yeah, it's a really, really tight timeline. I think right now, like if you're listening to this and you are on Yotpo and you haven't started to really assess options from an ESP standpoint, it's crucial that you do immediately. And we'll get into the technical side, as you said, Jacob. But yeah, it's basically 2 months before Q4 here. So the migration process should be getting planned thoroughly at the moment.
100%. And something you said about like the risks associated with migration, just to be really clear, there's like sometimes things happen that nobody could even predict, even the providers. So for example, we had one migration happening, and this was thankfully outside of BFCM, but still a really important migration and really critical season for this particular merchant. They had they were porting their shortcode. So essentially, their SMS shortcode was being ported from one provider to another. And something happened between the aggregator and the new provider, which basically was just like an error in paperwork that nobody could have predicted. And that sent that shortcode into basically like no man's land for something like 6 weeks. For 6 weeks, the merchant didn't have access to their shortcode to send from. The provider that quote unquote released it didn't have access to it anymore because it was released. And the new provider didn't have access to it because it was somewhere behind the scenes making its way through, again, literally no man's land of just one aggregator porting it to another. So it's this very complex, low visibility kind of process that happens behind the scenes, where it's essentially a lot of like legacy infrastructures that are pushing paperwork around, trying to kind of get access to what's otherwise your phone number that you're counting on porting. So providers will always say, oh, it'll take like 2 to 4 weeks, but expect delays. In my experience, it's never been 2 weeks. Sometimes it's 4 weeks, but like more often than not, it's like always like that 6 to 8 week period. And that's not just like end-to-end paperwork. There's also periods where you can be without a shortcode. So for example, if you plan on sending a lot of text messages from that number during, for example, a critical launch that's happening during a migration, you may honestly not even have the ability to access the number that you would send those through, because it's kind of gone, in this sort of like no man's land of aggregators and shortcodes until it's picked up by the new provider. So these things do happen. We've seen them happen. And honestly, we've asked for even better kind of explanations where it's like, why did this technically happen? And quite literally the answer we've gotten back is some paperwork got missed or something. Like there's no real technical response. It's not like I can go and say, oh, this configuration on this provider was not done properly. If it's Klaviyo, if it's Attentive, if it's PostScript, they're even out of the picture up to this point. They can do what they can to sort of like try to go through back channels, but until they have access to that number, it's kind of out of everyone's hands. So a lot of things like that can happen. And then on the ESP side, I mean, Liam, you mentioned why this is so timely. It takes a long time to warm an account. And what I mean by long time is it takes about 2 weeks to ramp back to sort of a normal send volume. But if you have a list of multiple millions of people that you're warming to, it could take up to 6 weeks to kind of get back to regular send volume, depending on what your kind of list health looks like and how that warming process goes. So some brands can ramp really, really quickly. They can hit and maintain consistent benchmark. But if you've been sending to a full list, if your engagement and list hygiene haven't been great, and you're trying to warm from that, you may have multiple weeks of sending to tiny, tiny volumes before you can kind of like qualify to ramp up to higher volumes. And we can get into more of the exact numbers and the schedule there, but don't expect to be fully back in sending within a few days. It typically will take a few weeks to get back to that point.
And what's interesting too is like it depends on when you actually get this migration process started. If you're on Yotpo, obviously, if you're doing it proactively before the end of December, that might be a bit of a better route than doing it during peak of BFCM. The timeline of roughly 6 to 8 weeks is usually what you're looking at, just to give buffer. Ideally, it's sometimes quicker, but that's usually where it falls. If you start that process 6 to 8 weeks out from December 31st, you're literally looking at basically the beginning of November. So during BFCM and that whole period of time where there's fires that might pop up on other parts of the business that you have to put out, then you're also dealing with this migration. So yeah, timelines are really interesting. I think before we get into like the whole technical side, Jacob, one thing that's kind of interesting is over the past like 3 to 4 years or so, with all the different SaaS providers and whatnot, in the DTC space, you kind of saw this move to consolidation. So you have platforms that were offering basically everything that they could. So like reviews, loyalty, email, SMS, etc. There's this kind of move from point solution to basically an all-in-one tool. And now it almost seems like there's a bit of a moving back to point solution and just focusing on like what the actual core of that SaaS tool is and executing on that really well. I forget who mentioned this to me one time, but it was somebody that's been in SaaS and software for a long time. And they were mentioning that there's always this kind of cycle of point solution all-in-one to an all-in-one tool, then reverts back to point solution, and it kind of flip-flops. So I don't know if you think that we're kind of heading back into an era of point solution, really focusing on one core tool, and one core tool can be like, multiple, functionalities within that, but really kind of keeping that focus on one area, as opposed to an all-in-one solution. Just curious your thoughts on that.
I think AI as like a fun tangent is a really good, it's almost the thing that like broke the glass on consolidation to point solutions again. Yeah. So if you think about it as a cycle, if everything over the past, if you look at almost like, okay, we'll zoom out and look at software revenues, let's say for these big providers. If you look at the Klaviyos of the world, for example, like they 3, maybe 4 years ago got into SMS and they were really trying to go after this sort of consolidated type of approach where they did email really, really well. They did it for a while, but beyond email, if you want to continue to sort of like scale the revenue side, like you want to push other, let's say, products in your product suite. So they pushed reviews, they pushed SMS very aggressively. They've always had a really strong integration platform, but what they've done with CDP, et cetera, like more data ingestion, they've kind of been pushing more of those products as part of this like consolidated offering, right? And on top of that, they have an ecosystem. So it makes a lot of sense for their core service, which I still believe is primarily SMS, but primarily email and then SMS. But between their CDP offering, between all of their integration partners, between reviews, they have a strong case to make that like you can staple on a lot of these like ancillary services, and together like it's a good ecosystem of data. But if you look at what AI is doing right now, and if you have these sort of smaller startups that can actually go and attack these different like sort of large enterprise providers in terms of their moat, you can have the one-off pop-up providers, for example, or the one-off review providers show up, and with a very small engineering team and with a very lean capital structure, go and actually break a lot of these moats that are not core to the business of Klaviyo, for example.
That's well said.
So if Klaviyo is like an ESP at its core, and they have a really good email and SMS product, and SMS I think is also like an economies of scale thing too, because you can push down those rates, et cetera.
Yeah.
But if they have a really good product there, but maybe they're not like best in class reviews, maybe they're not best in class, et cetera, you can actually have these other providers come in and start to chip away at these other lines of business. And I think that's what resets the cycle away from consolidation to point solution, because now leaner teams with fairly limited engineering resources can go and do what otherwise hundreds of people at these larger enterprises are doing, and frankly could even do it better, right? Mm-hmm. We've seen this with pop-ups, with providers such as Alia pop-ups, for example. Like they've popped up in the last 18 months or so, and they've really been like the household name now of pop-ups. And they're a relatively new and young team, but if you compare them to Klaviyo, like I think they're doing a much better job in that specific place, in that specific area. So I think it's an interesting thing that you're bringing up. And I think that AI is going to force a lot more of those individual kind of like providers, let's say, to emerge. Yeah.
Back to the point solution. No, I agree. Really well said. I think we're kind of in the phase of going back to point solutions, which I think is exciting too, because a lot of really interesting tools pop up. People that are really dialed in and focused on providing one solution pops up. And you have some great opportunities for D2C brands to use really cool new tools. I'm excited about it. I think it's cool, but I think this is kind of to your point there, Jacob, on the technical side of things.
Liam, just one more thing to say on this. Yeah. I've never looked at this from a like capital perspective, but if you think about it too, there's a certain investment horizon that some of these point solutions have, right? This is almost like the very beginning stage of maybe a larger M&A cycle too, where if you have like the individual CDP providers, the individual pop-up providers, the individual reviews providers, do those end up being future acquisitions that companies like Yotpo, like Klaviyo, like Attentive, for example, end up making? Mm-hmm. We saw that with Attentive as well. They made some acquisitions in like the conversational messaging space, et cetera. So I think there's a lot of, it's also interesting how much of consolidation is also driven. Mm-hmm. We have strategic buyers purchasing smaller kind of solutions, rolling them together, and then saying, okay, well, now we've got the really best in class, let's say, reviews platform. Let's kind of staple that into our set of core services.
I think
and
that
then
drives
that resets consolidation, right?
I think that drives a lot more of the consolidation like phase than we probably think, for sure. Yeah, no, that's an interesting parallel there, and you're probably absolutely right with that, because like you just look at the field right now and everything, there's so many tools popping up and so many point solutions popping up, and guaranteed there's going to be big acquisitions over time with a lot of these tools that are popping up. And then we're going to go back into an era of consolidation because everybody's going to be saying, hey, look, now we have the best point solution in this one space. So it's funny, but that's the cycle, I guess. But I guess on the technical side of things, Jacob, with Q4 coming up, like when would you recommend people start actually jumping on the migration process? And obviously the answer is probably as soon as you can. But if you have to kind of give some timelines, like, okay, this is probably the best phase to do it in, this is probably the second best, and this is like the worst time to really start doing the migration process.
I would say no later than like the third week of September, probably.
Yeah.
Because depending on how early you're going to kick off your sale going into BFCM, I mean, you don't want to be in a position where it's like October 31st and you still are like at half your sending volume, or you don't have your short code figured out, things like that. Like that's a really bad place to be in. I think we should expect brands to also kick off their sales a lot sooner this year. Mm-hmm. I think like every single year we kind of like make the joke that
inches forward.
BFCM just starts like a week earlier each time. So if the trend line stays, we're probably starting at the end of October with a lot of BFCM sales or sooner. I feel like Halloween now is just going to blend into some sort of like BFCM kind of kickoff for brands that don't really have like an affinity to that holiday. But like, please start now if you can, because at least you can figure out a lot of these like hiccups along the way. And honestly, like maybe there's no hiccups. Like it's very possible.
It can go well, but
Yeah.
I would say like more often than not, something pops up that you're just not expecting. And it doesn't mean it's a fire that you need to put out, but it's just something that you didn't plan for. It delays the process, or it's something that you have to deal with right then and there. So it's just the unexpected with this stuff.
Yeah. And most delays are not mission critical, but they are if your entire sales strategy is counting on it. That's when it becomes mission critical. So like most months of the year, you wouldn't care if X thing got delayed by a week, but you might care a lot if it's like end of October going into November, you have a sale that you're counting on that's likely going to produce the majority of that quarter's revenue for you. And in some cases, for some brands, like a large percentage of their overall annual revenue is going to come from November and December. Like you do not want a migration or some technical detail to be the thing that's holding that up. So it's best to just get ahead of it now. Get your terms and contracts ironed out. A lot of the providers are offering pretty good rates right now too. So it's actually a pretty good time to be migrating, especially from Yotpo. There's a lot of partnerships that are formed around this too, because Yotpo obviously wants its brands to have smooth migrations, good pricing, etc. So there will be price matching happening. There'll be very hands-on support to make the migrations happen. And of course, a lot of partners in the space as well to assist from a technical perspective, especially for brands with a large list where it's just like, it's not worth taking that risk and doing it right just matters that much. But yeah, the TLDR is start today.
ASAP. Yeah. And I think some providers are also like matching Yotpo pricing for the first year as well. If you migrate over, I forget exactly who's doing that, but yeah, lots of options to look through. And I think the main thing too in this as well is like, if you don't have the expertise internally within your company to make a decision on an ESP, definitely just find somebody that can assist you with that, whether you engage in an agency like ourselves, or you're just working with somebody that that you're friends with, or that you have a mutual connection with that understands this, and just get their 2 cents on things. You don't want to migrate preemptively to something that is not a good fit for your business. So just making sure that you actually have a second opinion on things. And most platforms are going to say that they're going to be great for you. And that's not a shot at anybody. Most of them will be sufficient for you for sure, but there's some that'll be a bit better for you just based off your current situation. So really looking to make sure that you identify that and get some external input on that if you don't have the expertise is important too.
Yeah, 100%. No, that's well said. Anything else, Liam, on your end that you want to?
No, I think we covered I think we covered most of it there. TLDR, like you said, start looking to migrate right now if you haven't already. Interesting time for SaaS and D2C.